We were talking about LLCs. We had a glitch, and
Yeah, so I mean, just lately, I've been going through a lot of clients, company formations because of this beneficial ownership interest reporting requirement that came along. What I'm finding is a lot of them are not either they're not structured or they're not doing the compliance work. And so what I was talking with you about is like the history of these business entities. And back in medieval type times, we didn't have there was no such thing. You had the aristocracy that owned the land, you had the peasants that worked the land, and then you had this middle class of people that they worked in trades or owned shops or things of that nature. And then as trade began expanding and we wanted to go on expeditions, the aristocrats and wealthy people were willing to make investments, but they didn't want to risk all of their wealth. So at that time, if you owed money, you could be put in prison, debtor's prison. And they didn't want to have to sell off land in order to pay for a bad business venture. So the idea of the corporation came about. So you had like you like the Dutch East Indies Company and stuff like this, where investment dollars could be put in, and if the venture failed, the investor was not held personally liable. They lost their investment, but they kept their lands and they didn't have to sell anything else. So that became the modern day corporation, and then the limited liability came about in the 1970s. First statute passed to enable LLCs was in Wyoming. And we like LLCs because they're super flexible, more so than other business entities, especially when it comes to taxation. And so what's happening, or what I'm seeing among clients of mine that's happening, is they will file a articles of formation with the Secretary of State. And I've got clients that are coming to me and they got like 6 or 7 of these entities, and they're not really doing it in a purposeful way or a thoughtful way. They're just kind of react. It's like a reaction. It's like, well, I'll start this business. And then they're making decisions based on stuff they heard or found on the internet about, well, I should have a Wyoming LLC or a Delaware LLC, or they'll file in these jurisdictions. And then when I ask them, well, why did you choose that? They say, well, I read something on the internet that this is the best place to do it. And in most circumstances, we end up shutting these things down because it makes no sense.
Yeah, I mean, if you do business in California and you have a Delaware LLC, you still have to get it approved to do business in California. So technically, you could have just started in California and
Right.
not basically double your work, right, with the corporation.
Right. So, yeah, I've got clients in California and they file an out of state LLC. And as soon as you start doing business in California, you have to file with California to be admitted as a foreign entity. And you got to pay all the same fees. And, so you just doubled your expense. Plus, you have to have a registered agent in Wyoming or Nevada or wherever it is. You have to have a registered agent in California. And
do you have to have a registered agent, or do people just choose that? And what's the point of a registered agent?
you must have a registered agent. And if you don't have a registered agent, your entity is going to have a problem with the government.
Well, okay, let me rephrase that. I can be my own registered agent. So why would I have somebody else be my registered agent? Tell me a little bit more about that.
So, as a registered agent, there are requirements for your presence. You have to be present in the office during business hours.
Okay.
Most people aren't. So, the worst case scenario I've had in my career is a client had an individual as a registered agent, probably their accountant or their lawyer, and they went to Israel. And a lawsuit was, they tried to serve a lawsuit against this person. That's why you have a registered agent. They receive legal process. So communications from the government, service of lawsuits, things like that. That's their purpose. So this plaintiff's lawyer sent out their process server to serve the complaint, and there was nobody there.
Mm,
So if that happens, then the plaintiff's lawyer can go to the court and say, "Here's declarations from my process server that we've tried multiple times and nobody's there to receive service." So
got it.
then the court can allow you to perform what's called substituted service. And in this case, it was service by publication, which means that they had to take out an ad in a newspaper and publish it for a certain
Mm,
period of time. And once you do that, then the court will say, okay, they've been served now. Now, the reality, nobody is reading that newspaper. Well,
yeah.
at least
What's the
not normal,
chances of somebody seeing
right?
that?
So they got a default judgment in the amount of $20 million against the client. And when you have a default judgment against you, you have a window of time in which you can go to the court and say, all right, I know about this now. Please vacate the judgment so that I can defend myself on the merits of the case. And if you do it within that window of time, uh, it's usually granted. But in this case, that window had already passed because the client didn't know anything about it. So by the
Mhm.
time it came to our office, it was kind of too late. So you can hire a professional registered agent for like $150 a year,
Yeah.
right? So for
Let me ask
150
you
bucks,
let me ask you the next question. Let's say your office address is like a virtual office that has a secretary there Monday through Friday, business hours. Is that sufficient enough, or is it still better to have a registered agent?
I I I never recommend serving as your own registered agent. I will
Okay.
not serve as registered agent for my clients
Okay.
because the liability is too much. You know, it's
Yeah.
it's a simple service, and there are companies out there that they're set up to deal with it.
Pennies on the dollar. It's like you said, 150 bucks a year. No,
Yeah,
not a big deal. Yeah. Okay.
yeah. But back to the original point is every jurisdiction that your business entity touches,
Hmm.
you need a registered agent there, right? So if you're
Gotcha.
doing business, let's say in California and Arizona, you have to have an entity that's admitted to those states, and you have to have a registered agent in each state.
Yeah.
And then if you decide, well, I'm going to use a Delaware entity to do business in California, Arizona, now I got to have one in Delaware. So you're
Yeah.
paying a lot of fees, and it's just
Yeah.
a
Exactly.
lot of work.
I, we're licensed in California, Texas, and Idaho right now. KMB is, and I have registered agents in all three. So,
Yeah,
yeah.
yeah, exactly. So yeah, and so the one I just had the conversation with, this guy bought into one of these seminar pitches about using a Wyoming LLC for privacy.
Okay.
And there are circumstances where that makes sense. But in this particular circumstance, this was his business. And I don't know anyone who wants to not promote their business, right? I mean, the
Hmm.
whole idea, I mean, you probably tell everybody in the world about K&B Capital.
Well, I could do better at that, but yes, I hear you.
Yeah, well, the idea is you want to promote it. You say,
Yeah.
I'm Brandon Fico. I am the owner. I am the president of Canby Capital. We're here to do home financing for you, and bring your business to me. You don't want to stay anonymous.
Yeah.
So why are you in Wyoming? Right? It doesn't make any sense. Now,
Mhm.
if I owned an apartment building, I might want to put that into a Wyoming LLC and maintain some level of privacy, so that if someone goes looking for, um, what assets do I own,
Mhm.
maybe they won't find my name associated with the Wyoming holding company,
Yeah. So
right?
that's kind of like a way of big money, maybe to protect a little bit, to
It's
be a
it's one way. There's certain
yeah.
states like Florida where land trusts are really, the preferred vehicle,
Oh, okay.
because trust you don't have to
What's a
file with the
land
Secretary
trust?
of State. Pardon?
What exactly is a land trust?
So land trust is there's the Florida has legislation that supports it, but the most famous use of land trust was Walt Disney, when they wanted to acquire the land in Orlando for Disney World. So that was not a singular purchase. They had to purchase different parcels.
Mm-hmm.
So if word got out that the Walt Disney Company was buying land in Orlando, that land would get really expensive really fast,
Yeah.
because
True.
right, the land, you can't move the land around. So if you want all these contiguous parcels so that you can build your amusement park, you have to pay whatever you have to pay.
Mm-hmm.
So they use land trusts in order to maintain the anonymity of the buyer. So the seller of the land did not know who they were selling to. All they knew was it was some land trust, and
Gotcha.
that's how that all that land was acquired.
Huh.
Um,
Interesting.
but and for example, land trusts don't really work in California.
Why is that?
California doesn't have legislation that supports it. There's not a lot of states do,
Oh,
but you could still use a trust.
yeah.
And the only identifier will be whoever the trustee is. So let's say I wanted to buy, say, an apartment building in California. I might decide to do that using a trust, where I set it up as the ABC trust, and I appoint you as the trustee.
Why wouldn't you just do it as an LLC?
Because if I set up a California LLC, everybody knows who I am.
What about if you set up the Wyoming LLC for privacy, but would you have to get that approved to buy in or would you have to get the LLC approved to do business in California in order to buy property in California, or no? Can you just go and
So the way I'd probably do that is form the Wyoming Limited Liability Company, hire an agent to represent me in California,
yeah.
and then purchase the property in the LLC. After the purchase is done, then file the foreign registration with the California Secretary of State.
Hmm. Interesting.
Right, but if you look at the property record, you're going to see XYZ Limited Liability Company, and then you go to the Secretary of State, the California Secretary of State website. You'll
Hmm.
search for that LLC, and then you can start looking at who are the officers and directors, which are supposed to be reported every year on the annual report.
Yeah.
So then people play games where it's like, well, I'm not going to do it that way. Well, now you've got potential liability with the government, and you're not playing by their rules. So
Huh.
uh, if they catch you, they're going to not treat you well.
So really, the only way if you're buying property in California to have anonymity is to do it through a trust.
It's one way, and then you have to ask yourself, why do I care so much about anonymity?
True.
And
I mean,
in
in my mind, maybe you care if you got millions, billions of dollars, and you just are
well,
protecting yourself
really,
because people like to sue money, So,
right.
but
So you don't care if
otherwise,
yeah, you won't care if you have billions.
yeah. Well, that's true.
Because if you have billions of dollars
Good.
and someone sues you for 20 million, you won't even notice the 20 million is missing. Your life will not change at all.
Yeah.
When you hit the billionaire status, that's what we call FU money.
Hmm.
Uh, that's why you've got these guys sailing around in big, crazy large yachts and in private jet planes. They're not being anonymous.
Yeah.
They're broadcasting to the world that I am filthy rich. Uh, no, the guys who really worry about this stuff are like the people who have like 5 million bucks, 10 million bucks,
Yeah. Yeah.
like
Okay.
right because if you get so like doctors are a good example, right? You're in a
Mm,
high risk profession. Let's say you're
yeah.
an obstetrician delivering babies, and um, the baby turns out brain damaged. That's going to settle somewhere between $4 and $10 million.
Hmm.
And most doctors in California carry $1 million in insurance coverage, which
Mm,
is not enough to pay for a birth injured baby. Now,
wow.
I represent a lot of those,
Yeah.
and uh, they're a perfect example of someone who would benefit from not just anonymity, but asset protection. So the way this kind of plays out, assuming worst case scenario, let's say you get sued. Let's say you've got $5 million in assets, including your primary residence and maybe a cabin in the woods, and your insurance is not enough to settle the case, and everything goes against you, and you have a $10 million judgment against you. So the insurance will pay out $1 million, and now you owe nine, and so then as a plaintiff's lawyer, they will notice what's called a judgment creditor's hearing, and that's where you're required by law to go to the courthouse. You're placed under penalty of perjury. So you raise your hand, say, I promise to tell the truth, the whole truth, nothing but the truth. And then the plaintiff's lawyer starts asking you questions to discover what assets do you own. And they're going to ask you, do you own any interest in a limited liability company or corporation? Well, yeah, you got your Wyoming LLC, but now if you say no, you just committed perjury. So now you just placed yourself in jeopardy.
Hmm.
So you have to tell the truth. So, yeah, I do. Well, what do you own? Say I have a XYZ LLC in Wyoming. What does that LLC do? It owns an apartment building. Which apartment building? Well, the one at 123 Main Street. I see. I'd like to take ownership and control of your LLC, right? So now you get into bigger questions. Does anyone else own an interest in that LLC? Hopefully, the answer is yes. So yeah, my friend Brandon Fico is a 50-50 partner in that.
Hmm.
So now you get the second benefit of Wyoming, which has very strong charging order protection, right? So uh, LLCs are what are known as charging order protected entities,
Hmm.
and the way that works is if I'm the plaintiff and I say I want your 50% ownership in the LLC, Wyoming steps in and says nope, not so fast. You're not entitled to it.
Hmm.
And the reason you're not entitled to it is because we have strong charging order protection, and we don't want investors to be forced into a partnership with someone they don't want to be partners with
Yeah,
because
that
it's
makes
not good
sense
for business.
for sure. Yeah.
So what we'll give you instead is a charging order. And a charging order works just like a lien.
Oh, okay.
So I get a charging order, I serve it on the registered agent for this LLC. And what that charging order does is it says any money payable to Brandon has to be distributed first to his creditors until their judgment is satisfied. So that first $9 million that would come out for Brandon has to go to the creditor. So you just don't distribute money,
Mm-hmm.
right? You keep that in the LLC. There's a problem though. Someone has to pay taxes on the income because the government still wants their income taxes.
Mm.
So then what the LLC does, it kicks out its K1 at the end of the year, and it has to allocate that income amongst the partners. So it's going to say, all right, well, Smith, here's your K1 for half of the profits. Brandon, you're not entitled to any of them, so we're going to give this K1 to your creditors.
Mm.
So let's say we had $100,000 profit, so I get 50,000, they get 50,000. Well, what they got is a tax bill, because now they owe taxes on the 50 grand, which is painful,
Mm-hmm.
right? And so that's one of the techniques I use for asset protection is I want to create a painful situation so I can leverage that for negotiation purposes. So instead of $9 million, how about we pay 500,000, right? Something like that.
Yeah.
But so the difference between anonymity is that's helpful when people are trying to decide whether to sue you or not. So before I sue you, I want to know that there's going to be money there.
Yeah.
Well, the problem for a doctor is it's assumed that you have malpractice insurance,
Mm-hmm.
right? So I'm not going to do an asset search,
Yeah.
right?
Don't they
I'm
have
not
to
going
have
to do it.
malpractice insurance?
You don't have to,
Really?
right? Well,
Mm.
the reality today is that most doctors work within a managed care environment,
Got it.
right? So
Yeah.
they work for a large medical group or other healthcare organization,
Okay.
which has the insurance.
I see. Okay.
But this was back in the day when doctors were largely independent or in small group practices.
Yeah.
Um, so the only time you did an asset search as a plaintiff's lawyer was if you realized that the case was more valuable than the limits on the insurance policy, and then you
Mm.
might want to make a decision about how much time, effort, and resources do I want to invest in pursuing a large judgment that I may not be able to collect,
Yeah.
right?
All right.
And
Let me ask you something that was kind of popped on my brain. Um, you were saying when people file LLCs that they don't file correctly. Now, let's say it's just me. I just no partnership or anything. I file for an LLC. Can you
right,
really screw that up?
yes.
Okay. Tell me how.
So why would you? What was the purpose for filing the LLC?
Business, opening a business.
Right,
Hmm.
right. Probably because you don't want to be personally liable for the debts of the business,
Okay.
right? That's usually kind of the deal. I mean, some people form an LLC just because they want to put LLC on their business card.
Mm.
It's just an ego thing.
Hmm.
But typically, what you're doing is you're saying, "All right, I'm going to go into business, but I don't want to risk my personal assets for the debts of the business."
Hmm.
So they file these articles of formation. They don't do anything else.
Okay.
So then you sign your contracts, and you sign, Chris Smith, manager of the XYZ LLC.
Hmm.
So you're signing it in your capacity as a manager or officer of the LLC, not in your personal capacity.
Hmm.
But then you default on the contract,
Mm.
and someone like me gets hired to file a lawsuit to collect on the debt of that, that obligation. One of the first things I'm going to ask you to produce is your operating agreement, your minutes and resolutions from the date of formation to the present, and probably other documentation related to that entity.
Mm.
And if I can demonstrate to the court that you're not operating that entity as a separate legal entity,
Hmm.
and that this is simply an alter ego of yourself. And the court agrees, your personal assets are mine,
It's called piercing the veil, right?
piercing the corporate veil.
Yeah.
And
Hmm.
it's not that hard to do.
Yeah.
So, as a business owner who wants to separate business liabilities from personal,
Hmm.
uh, it takes a little bit of work. So,
Yeah.
even in a single member LLC, I'll always put an operating agreement in place. It won't
Okay.
be a complex one. It'll be
Yeah.
simple.
Hmm.
The minutes and resolutions will probably be one pagers once a year. We always do an annual meeting uh, or something like that. It's usually like a 15, 20-minute video conference. And while we're on it, I kick out minutes and resolutions.
Gotcha.
And what we're doing is we're documenting kind of the corporate record.
Hmm.
And then my clients get what I call the LLC playbook,
Okay.
which kind of outlines, how do you operate? How do you use this limited liability company?
Yeah.
And
Now, for you to do that kind of service, is that like a membership thing, or is this just I hire you and like how does that work?
yeah, so I have a membership program. It's $97 a month.
Okay.
We take over the compliance work. We kick out your minutes and resolutions. Uh, we have weekly office hours, which is just a video conference that
Hmm.
people can send in questions, and we'll talk about just like we're talking now.
Hmm.
And
That's cool.
and then I'm building out what I call the academy, which is basically training materials on how to operate a business,
Nice.
and hopefully keep clients out of trouble without them having to spend a lot of money.
Okay.
So just kind of give you an example, I'm $450 an hour.
Yeah.
And so if you come to me and say, I've made a mess, I need your help cleaning it up.
So wait, do I have
Uh,
to pay you $450 for this podcast?
not for the podcast, but
I'm lucky.
the reality is I'm going to say, yeah, I'll help you, but I need $20,000 in my trust account, and we're probably going to spend closer to 100 or more,
Hmm.
right? Or you spend the $97 and you come to office hours and say, before I do something ill-advised, uh, you can send that question in. You can attend the live broadcast, or you just listen to the recording. And while I don't give legal advice that's specific to that client,
Yeah.
it's general advice about the general situation. That, hey, I'm thinking about buying a vehicle for the business, for delivering stuff. What's the best way to do that?
Mm,
And then
that's
we'll
cool.
talk in generalities about whether you should purchase it to be owned in the operating company, or whether you should have a separate holding company that would own that asset.
Nice. Very cool. Okay. Next question. I have a friend slash business acquaintance that is looking to set up either an LLC or an S corp. He does loans, such as myself. Wants to have the broker pay him directly, or sorry, not pay him directly, pay the business instead of him directly. So, what's the best entity for that? Is it an LLC? Is it an S corp?
So S corps are not entities.
Okay.
E- S corporation refers to a tax status. So a
Mm,
limited liability company can operate in one of four tax statuses.
hmm.
The first is if you're a single member LLC, the IRS will treat you as a disregarded entity, which
What does that mean?
means they will,
Disregarded.
which means you don't even file a tax return for the LLC. You just report your income and your
You just
business expenses on your 1040 and Schedule C,
and Schedule C. Yeah. Okay.
right?
Hmm.
So
Yeah.
IRS won't even look at it. In California, you'll file a one-page return because the franchise tax board wants their $800.
And if you set up a corporation and designate it as an S corp, I should say, because when you set it up,
You
it's a C
right,
corp, but you have to
right.
file for
So
the designation as an S corp.
right,
Then you have separate tax returns, 1120s,
right.
and
So
you're
when you form an LLC, you have that same option. You can elect. You can be taxed as a sole proprietorship, right? That which
yeah.
is the disregarded entity. If you have more than one member, you're taxed as a partnership.
And
If
that right
well,
there is the S corp designation, right? Is what you just said, right?
well, then you can choose to change your default designation to either an S corporation or a C corporation.
Yeah.
So there are four possible choices, which is why we like LLCs because it's flexible.
Hmm.
So, for example, let's say your friend is just getting started. What I'd
Hmm.
probably recommend is start as a single member LLC.
Okay.
Just report everything on your 1040
Hmm.
and your Schedule C because that's the least expensive option. And then once your income reaches a given level, probably somewhere around $50,000, $60,000 a year, then evaluate making an S corporation election.
Why is that? Do
And
you get better tax breaks by having an S corp or something, or
right,
what?
so
Corporation?
as a sole proprietor or using a disregarded entity, I have to pay income tax on the money I generate.
Yeah.
I also have to pay self-employment taxes, which runs about 15.3%,
Hmm.
which is expensive.
Hmm.
With an S corporation, now I'm required to put myself on payroll.
Mm.
Right. So instead of taking a distribution, which is I just transfer money from the business operating account into my personal checking account,
Hmm.
now I have to put myself on payroll,
Yeah.
which is which is an expense because you don't want to run your own payroll. So you use a payroll company like Gusto.
Yeah.
Gusto
Who
will
do
run
you like? What is it?
I use a company called Deal, and the reason I
Deal?
use them, yeah, the
Okay.
reason I use them is I process payroll internationally,
Oh.
and they handle all the local compliance because I don't know
Mhm.
what's required to pay someone in Italy,
Yeah.
for example,
Yeah. Yeah. Yeah.
uh, or Mexico.
Yeah.
Mexico's got their own rule set, and I can't keep track of all those requirements. So I use a global payroll processor.
I see.
Um,
ADP and paychecks, they don't do international. Is that why you like deal for
right.
you? Okay.
Yeah, I mean, if they do international, I don't know about it, but
Yeah.
uh, when I started hiring people, outside of the country, I did not want to figure out all the requirements,
Yeah.
and
Of
and
course. Mhm.
yeah, so yeah, you have to put yourself on payroll, so you're incurring expenses now because
Yeah.
because you have to have your payroll expenses, and and you're going to have more accounting burdens, more tax reporting burdens.
As an LLC, you don't have to do that.
Not as much. So again, we're conflating the entity versus the tax status.
Okay.
So an LLC could be taxed as a sole proprietor, as a partnership, as a C corporation, as an S corporation. So the
Mm.
fact that someone says I have an LLC doesn't tell you anything about how it's being taxed.
Yeah.
And if someone says I have an S corporation, now you have to dig a little bit deeper because you don't know if it's a corporation or whether it's a limited liability company.
Really? An
You
S
really
corp
don't.
can be an LLC?
Yes.
I didn't know that.
Yeah. So
Hmm.
limited liability companies can elect, they can choose how they want to be taxed.
Okay.
All right. That's why we like LLCs because they're very
Yeah.
flexible.
It's
Okay.
flexible. Seems a little simpler.
Yeah. And for some things, corporations are terrible vehicles like owning investment properties,
Yeah. Hmm.
right? You would not want to purchase that apartment building in a corporation because the taxes just don't work out,
Uh,
right? You want to be taxed as a partnership. So
yeah.
back in the day, before LLCs were around, what we used were a dual entity structure, which was a limited partnership. because we wanted partnership taxation, but we wanted to limit the risk for the investors. So the way a limited partnership works is you have a general partner and you have limited partners. Limited partners have to be completely uninvolved in the business. So you'd write your check. Here's my $50,000 to fund the purchase of an apartment building.
Hmm.
And so you get your group of investors together, and then you have to have a general partner. General partner has unlimited liability for the debts of the business, right? The limited partners have limited liability. Their liability is limited to the loss of their investment.
Mm.
So the problem for the general partner is, okay, if I'm going to purchase, manage this transaction, get this deal done, and hire property management and take on all those responsibilities, I don't want unlimited liability. I don't want to risk all my personal assets.
Hmm.
So the way we set that up is the general partner would be a corporation,
Okay.
right? So the corporation would charge a management fee to the limited partnership. So that partnership, that management fee would come into the corporation, be used to pay expenses and generate a paycheck for whoever the manager or managers for,
Yeah.
right? So they'd be on payroll for the corporation. The limited partnership had partnership taxation. So what the partners would get is they would get distributions reported on Form K1, and the depreciation would flow through to them, usually more than enough to offset the tax liability on the distributions.
Hmm.
So let's say you're earning, let's say, a few $1,000s a month. You're taking your depreciation deduction. So you report your income at your 3,000 a month times 12. So you got $36,000 in income, and then you're going to offset it with your depreciation deduction, right? So that's why you know we use a structure like that. And when the limited liability company came along, that was easy. You just elected partnership taxation, and the manager took the place of the general partner, and they could be paid however it made sense.
Hmm.
Usually they just take a distribution.
Got it.
It's just all in one wrapper instead of having to break it off.
Hmm. Okay.
But it was, yeah, the LLCs are super flexible. So your friend, he wants to get started, I'd say set up a limited liability company, do the minimum compliance work, which is simple operating agreement. You do your uh, minutes, resolutions, you have your organizational meeting, your annual meeting, all that
Hmm.
kind of stuff. Doesn't take that long. Educate yourself about the operations of an LLC, about how do
Hmm.
you pay yourself, but how do you pay for business expenses? How do you separate things so that you're not commingling funds and doing things to ruin the protections the LLC offers
Hmm.
you?
Yeah, that makes sense.
And then when your income increases, at some point, it's going to make sense to pay for the payroll processing and incur the expenses,
Mhm.
because you have to pay yourself the salary in this, and you're still going to be paying income tax on that, and you're still going to be paying employment taxes on that. But any profit above the salary can be distributed out to you. You'll have to pay income tax on that, but you do
Mhm.
not have to pay the employment taxes. So right there, there's 15.3%
I see.
that you're not paying out. And California has a surtax on S corporations because California likes doing stuff like that.
Mhm.
Uh, but there is a benefit
No, they want our
to
money?
shifting. Yeah. So the idea is you don't take the S corporation election until it benefits you,
Okay.
right? So the LLC lets you choose the tax classification that best suits you,
Mhm.
and you can change that as needed.
Got it. Cool. All right, man. Well, I think you answered all my questions.
Yeah.
If you
So
guys, what's that?
yeah. So the moral of the story is, invest small dollar amounts in things like compliance and
Yeah.
hiring the professional registered agent, and follow the rules,
Yep.
and everything will probably work out okay.
Cool. I don't know, man. Well, I appreciate you. You are a wealth of knowledge, and I enjoy these conversations. So
Yeah. No, it's
we,
fun time. Fun time.
yeah, we'll call it a day on that, and let's go in recording. Boom.
All right. So what I was thinking about talking about, because this is coming up a lot right now with clients, is uh, people set up LLCs, and they're really super easy to form because you just file a piece of paper with the Secretary of State, pay the fee, and you're done. Well, you're not done. All right. So uh, you have to structure it, and most people don't do it. You need to maintain it. Most people don't do it. If you're a larger business, you probably have lawyers or other people on staff that take care of this stuff. So I thought maybe we talk about like the basics of how to set up a limited liability company and kind of how they work, and we can have a conversation about that. So most people don't really understand why limited liability companies or corporations exist or where they came from. And so all this kind of grew out of English common law. So back in the day, government was feudal, right? So you had a king and you had dukes and such, and the aristocracy owned all the land. And so if you were, let's say, a duke and you owned, your estates, you had to pay a tribute to the king. And so you had peasants that worked the land to generate revenue so you could pay the king. And in between the peasantry and the aristocracy was, tradespeople, uh, shop owners, stuff like that. So then the thing that changed was that the world got a little bit smaller, and now we had ventures going off to the new world to bring back spices and furs and things like that, and it was expensive to do. And there were people, namely aristocrats, who were willing to finance these ventures, but if the venture went upside down, there used to be what called debtor's prison, right? Like if you were in debt, you could be put in prison, which is not pleasant. And they didn't want to deplete their lands and their riches if the venture, say, sunk literally. The ship got wrecked and all was lost. So they came up with this idea of the corporation, where the investor could put their money in and send people off to bring back spices or whatever commerce was going to be conducted. And if everything went pear shaped and it didn't work out, you'd lose your investment, but you had no liability beyond that. Now, so that allowed you to be a ship owner. You could do these things without risking all of your wealth. So today, what we have, that evolved into the modern day corporation. And then in the 1970s, Wyoming was the first state that came up with the idea of a limited liability company. And the reason why LLCs have gained a lot of popularity is because they're very flexible, more so than a corporation, especially when it comes to taxes. So people will either use a service such as LegalZoom, or they'll just file it themselves. I have clients that they file 6 or 7 LLCs all over the country. They have them in Delaware and Nevada and Wyoming, and and they don't know what they're doing. And the reason they're doing it is because they read something on the internet about you should have a Wyoming LLC, or you should have a Nevada or Delaware, whatever jurisdiction is popular at the time. So they have all these shell companies, and it's becoming problematic right now because of the new Corporate Transparency Act requirement. So for every one of those companies, you have to file beneficial ownership of beneficial ownership interest report, BOI report. If your business entity exists before January 1 of this year, 2024, you have all year to file it. Right, right. And the reporting isn't particularly hard, but most people don't know about it. It's still not well understood. And the penalty, if FinCEN chooses to enforce it, is $500 per day. So if you're late, it's $500 a day. And if it needs to be filed, and then you have to file updates within 30 days of any changes taking place. Right. So the right. So you have 30 days in order to report that change. If you don't do it within 30 days, you're potentially subject to that $500 a day penalty. And if they decide that your failure to report was willful, you're